Before this World Cup is even finished, analysts expect more than $50 billion to be wagered on it. Not spent on tickets, not spent on shirts. Wagered. And that number tells you something uncomfortable. The World Cup is no longer just a tournament. It is a global machine for extracting attention, converting it into risk, and selling it back to you one bet at a time. Welcome to Block Docs, where we strip away the noise to expose the raw truth of crypto and global finance. Hit subscribe to track the money with us, and let's get straight to the story. The 2026 FIFA World Cup is the biggest edition in history. 48 teams, 104 matches, 3 host countries, 16 cities. That matters because scale changes the economics of everything around an event. More teams means more audiences. More matches means more betting windows. More cities means more sponsors, more promotions, more local markets, and more chances to turn casual fans into paying users. And the betting industry knows it. Analysts at Macquarie projected more than $50 billion in global wagers for this tournament. Flutter, the company behind FanDuel and Betfair, said it could be handling up to 100,000 bets per minute at peak. Some operators expected at least double the betting volume of the 2022 World Cup. This is happening at the perfect moment for the industry. Since 2018, legal sports betting has spread rapidly across the United States. What used to be a fringe habit pushed offshore is now a polished mobile product, backed by licensed apps, bonuses, celebrity advertising, and frictionless payments. And that changes the World Cup itself. Because once betting becomes easy, every match stops being just a match. It becomes a market. There is also a second layer here: crypto. FIFA announced Kraken as an official crypto exchange supporter for World Cup 2026. That does not mean football fans suddenly become crypto investors overnight. But it does show that crypto firms understand something very well. If you want mass trust, mass attention, and mainstream legitimacy, you buy your way into the biggest stage in the world. So this is not a story about who wins the trophy. It is a story about who wins your time, your impulse, and eventually your money. Football is the bait. The product is behavior. The modern sportsbook doesn't make its money from your love of the game. It makes money from repetition. Open the app, check the odds, build a parlay, add a boost, reopen the app, watch live, bet again. The match lasts 90 minutes. The monetization loop runs all day. A World Cup is perfect for this because it compresses global attention into a fixed calendar. Every one of those moments can be turned into a prompt. And when an event becomes predictable in schedule, but unpredictable in outcome, that is commercial gold. After US rules changed in 2018, sports betting didn't just become legal in more places. It became smoother. Bonuses got bigger. By 2025, the broader US gaming industry was already Dubai, porting record commercial performance. And now, with a 48-team format, a 104-match schedule, and better North American viewing times for one of the most aggressively monetized betting markets in the world. That is why operators are not treating this as just another sports event. It's a customer acquisition war. Because the short-term wager is only part of the business. The real prize is retention. But here is where the story gets interesting. The more an industry relies on attention spikes, the more it starts to resemble crypto. Not in technology, in behavior. Because crypto learned this years ago. Narrative first, liquidity second. Utility maybe later. And football already has its own crypto-native wrapper for this: fan tokens. During the 2022, Reuters reported that average daily trading volumes in fan tokens jumped to around $300 million in November, up from 32 the month before. In plain English, the event did not just move football fans. It pulled in traders. A later academic study found something even more revealing. Fan tokens tended to rise before the tournament, then weaken as matches actually unfolded, while volumes stayed elevated. That is classic event-driven speculation. A large live event doesn't just attract fans. It attracts speculators, marketers, scammers, sponsors, exchanges, and anyone else who knows how to monetize urgency. Once you see that, the World Cup stops looking like sport and starts looking like a stack. And yes, the scammers are part of the story too. Security researchers at Fortinet warned that attackers were already exploiting World Cup demand with fake tickets, phishing pages, malware, impersonation, and credential theft. Because when public attention spikes, fraud follows it. That is the technical detail people usually miss. Attention is not neutral. It creates liquidity for legitimate businesses and cover for illegitimate ones. That is true in betting. It is true in crypto. And it is true every time a giant event convinces millions of people to act faster than they think. So here is the uncomfortable truth. The World Cup is sold to the public as a celebration. And on one level, it is. But commercially, it is something colder than that. It is a synchronized global demand shock. For 1 month, emotion becomes predictable. National loyalty becomes measurable. Attention becomes programmable. And risk-taking becomes a product. That is why betting firms love it. That is why sponsors pay for it. That is why crypto exchanges want their logos near it. And that is why every layer around the event becomes more aggressive while the public is looking somewhere else. Even the language gives the game away. Boost, special, limited time, live now, cash out. That is not the language of sport. That is the language of conversion. And once you understand that, the biggest World Cup story is not who lifts the trophy. Because once an event can reliably turn emotion into behavior, finance will wrap around it. Crypto will wrap around it. Scams will wrap around it. And every company chasing the next user will rush in behind them. The first lesson is that attention is not just cultural, it is economic. When everyone is watching the same thing at the same time, money flows toward the businesses that can monetize urgency fastest. In this case, that means sportsbooks, sponsors, exchanges, affiliates, and fraud networks, all operating in the slipstream of the same event. The second lesson is more personal. Retail investors often think risk appetite is a market-only phenomenon. It is not. Risk appetite moves across categories, from betting to meme coins to altcoins to fan tokens and prediction markets. Different interface, but same psychology. And the third lesson is the one most people learn too late. The most profitable businesses in a mania are often not the people taking the risk. They are the people selling the interface, not the bettor, the sports book, not the fan, the platform, not the trader, the exchange. This is bigger than football. The World Cup is just a clean case study in what modern financial culture has become. The lines between fandom, trading, and gambling are getting thinner, and every cycle makes that blur more profitable for someone. What do you think is the bigger story here? The betting boom, the crypto sponsorship play, or the way giant events train retail behavior? Let me know your thought. See you in the next breakdown.